everyone. My name is David Milanec. I am the president and founder of Katz Milanec, and I was asked to come on by America's Heroes Group tonight. I appreciate the invitation. And the reason I was asked to come on was to talk about the upcoming tax deadlines, as well as the different types of tax planning and tax advantages that veterans and really everyone can take advantage of. So let's start with the upcoming deadline. So I know a lot of people out there, it's coming up on Labor Day weekend. Next weekend is Labor Day weekend, as everyone knows. It is it's actually very close to the business filing deadline for taxes with the 6-month automatic extension. So if you have an extension, if you got an extension for your business and you still haven't filed it, we're actually just under 20 days away from the filing deadline for businesses, and individuals are another 30 days later on October 15th. So it's very important, if you haven't already gotten your taxes, your documents together and everything, you haven't already gotten everything together for you to file, it's very important that now is the time you really need to act and do that. If you are an individual or a business that is having some difficulty with getting those things together, that is something that we can help with. First off, obviously, you can give us a call, 708-914-8220. We are able to handle pretty much any type of case. But the thing that we can really help with, especially businesses or individuals, we can get any documentation for you that would have been filed on your behalf by another party, such as, for example, a W-2, a 1098, a 1099. For you or your business, we can get that documentation for you. We file what's called a power of attorney, and then that allows us to pull a wage and income transcript from the IRS. That's not all it allows us to do, though. It actually also allows us to represent you before the IRS. So if you have any sort of an issue with the IRS, if you owe back taxes, if you have a dispute where the IRS says you owe money and you think you don't owe money, couple of examples with this. There is a program called the Offer and Compromise program. Offer and Compromise is a contract between you and the IRS. And that contract will allow you to get out of any tax debt that you would owe, provided that you agree to pay certain fees and file and pay your taxes timely for the next 5 years. In exchange for that, the IRS agrees to eliminate your tax debt. So a couple of examples of that I've done. There was a business that I worked with that I was able to help them eliminate. They started with over $800,000 payroll tax debt. We took that down to $8,000. So we actually ended up saving them over $800,000. And then individuals, I've had a couple cases where people have owed $150,000, $100,000, $120,000. We were able to take those tax debts and just completely basically eliminate them, reduce those down to $500. So talking about 150,000 to 500, 120,000 to 500, 100,000 to $500, $500. And so if that is a situation that you find yourself in, definitely give us a call on that. 708-914-8220. Again, 708-914-8220 is our number. And like I said, we can also help you. So if you are having trouble getting your documents, we are now in the stage of the year that we can pull your wage and income transcript and be fairly confident that it's going to have all of your documentation on it. And it is a good thing to have that wage and income transcript pulled, because a lot of times you can find surprises on there. So there have been times where I have found documents that my clients have had that were filed with the IRS that, well, one example would be, I found one time I pulled a wage and income transcript for a client, and I found a 1099-C on the wage and income transcript. That 1099-C was for $150,000. If we didn't report that 1099-C, the IRS would have sent him a bill for $150,000. I'm sorry, not for for $50,000 on that $150,000 of income, with penalties and interest. It would have been probably about a $30,000, $40,000 tax liability, tack on penalties and interest. Could have been $50,000, could have even been $60,000. But by pulling that wage and income transcript, we were able to report it. We were able to use Section 108 of the code to eliminate the income generated by that 1099-C, and therefore we were able to save the client between $50,000 and $60,000 just through getting that wage and income transcript for them. And so that can be very important to, if you're not sure if you have all your documents, or if you think there could be a chance that something could be filed under your social security number or EIN, and you may not be aware of it. That's definitely something we can help you with. Give us a call, 708-914-8220. Another thing I see a lot, especially in recent years, is with the participation in the gig economy that has become very prevalent. There are a multitude of people that are currently operating businesses, and they don't realize they're operating businesses. So they're getting a 1099, and by getting a 1099, they are then having to report that on because they get it under their social security number. They then have to report that on a Schedule C on their tax return. Well, what that does is it creates effectively a business filing for a sole proprietorship, which is what anybody who is working in the gig economy is operating as, if they don't have their corporate structure done correctly. They are a 1099 worker filing as a sole proprietorship, which then subjects them to income tax like everybody else. But then in addition to that, they also are subjected to something called self-employment tax. Now that's an additional, on top of your income tax, it's an additional 15.3% of your whatever income you earn. Now, that you don't actually have to pay that. And that is not something that the IRS will tell you. but it's true. You don't have to pay that. You can incorporate, and when you incorporate, you can file an election to be taxed as a small business corporation. And through doing so, you will still end up paying your income tax on the income you earn through your business, like everybody else does. Everybody has to pay income tax. It's just a fact of life. So you still pay your income tax, but you completely eliminate your self-employment tax because you are now filing as an S corporation, and earnings on a business through an S corporation are not subject to self-employment tax. So I actually offer a guarantee on this. Specifically, if you come to my office and we recommend, and I personally recommend to you that you incorporate, and you do not save at least the amount in taxes in the first year, let alone all the subsequent years after that you use it. But if you don't save at least the amount that you pay us to incorporate you in the first year on your taxes, I will refund you the difference. And that is a guarantee. So if you are in that economy and you feel like you should at least consider the possibility, the option of incorporating, go ahead and give us a call, 708-914-8220. Again, 708-914-8220. And I think basically if you are basically, if you're making more than $10,000 a year doing that kind of work, it's at least worth considering, because depending on your situation, that even that little amount of money can save you a substantial amount in taxes. On $10,000, you save $1,500 in self-employment taxes alone. And so that kind of touches on a larger point, which is that when you're operating a business, or really when you're doing anything that makes money, you want to be doing tax planning. There's an old saying, and I know it's very popular in the military: if you fail to plan, you plan to fail. With taxes, this is no different. If you fail to plan your taxes, and what you're going to file, what you're going to need to pay, everything like that, you are planning to fail. An example of this would be if you were a truck driver, and as a truck driver, you go and you make $200,000 for the year, $250,000 for the year. I've seen this where they make substantial amounts of money on a 1099. 250, 300. I've even seen 500,000. I've even seen $1 million. And while doing that, they're not paying in any taxes. They're not paying in any estimated tax payments. And then the end of the year rolls around and they go to file their taxes. And yes, they have significant expenses against the income that they earned. So they're not going to be paying taxes on that full, however much they make, $250,000, $300,000, whatever the case may be. But it's not uncommon in those scenarios for them. I'm sitting across from them and they're staring down a $50,000 tax bill or a $25,000 tax bill. And that's where they planned to fail, because they did not consider as they went along what their tax liability would be and how to counteract that. So what are some strategies that you could use to do some tax planning? Well, the first thing, as I mentioned before, everybody has to pay a certain amount of income taxes. So one thing that we offer is that we will calculate your quarterly estimated tax payments so that you're making the correct amount of tax payments. And this can be important because, as an example, even someone who wasn't in business, I had a client once who just had investment income, and their investment income was it was a significant amount, to where they had to pay about $30,000 of estimated tax payments. And they got vouchers that told them to pay about $30,000 of estimated tax payments. They paid all of the estimated tax payments. And because their investment income increased by a significant amount year over year, it increased by about $40,000. They actually ended up having an additional, even after they paid the estimated tax payments, had an additional $4,000 tax liability. And if you're in business fluctuates a lot more than investment income. So it's very important in those situations to regularly calculate what you need to pay to the IRS, or alternately, to know what your current tax liability looks like, so that we can strategize ways to reduce that income tax liability. So what are some of those strategies? So let's talk about a home office lease. So if you have a business, most people who have a business work at least some out of their home. This is pretty universally a fact. So if you are in that situation, you can, once you have a business, you can contract with your business. If you own your home, well, actually, there's two ways to do it. If you rent your home, you can contract with your business under something called the Augusta rule, where you can take rent for a certain number of days, has to be under 14 days, but you can take rent from your business and you can deduct that rent on your tax return, and you don't have to report the rental income as income on your tax return. So this can save a decent sum of money, because if you, let's say you do $500 per day for 14 days of the year, that's $7,000 that we can just completely write off of your tax return. Would save you, depending on your tax bracket, $1,500 to $3,000. I know that doesn't sound like much, but if you do own your home, what we can do instead is we can actually create a lease contract between you and your business, which will allow you to you'll actually report that rental income. Then you'll have a monthly rent and you'll report that rental income. But by allowing the business to access common areas of the home, which you write into the lease contract, we can then make the home a rental property, which we can then deduct 50% of all of the costs of the home. So utilities, property taxes, mortgage interest, depreciation, everything like that. The end result usually ends up being about somewhere between $15,000 and $30,000 of tax write-offs, which can be up to $6,000 to $15,000 tax savings. So that's pretty big. Another example, I had a client earlier this year who at the end of the prior year, they had not paid any taxes in, and they had a substantial profit. They had about $50,000 of profit or so in their business. So they were looking at buying a new vehicle. So I told them to go ahead and get a vehicle that was over 6,000 pounds gross vehicle weight rating, and that was, and they needed to get a van, an SUV, or a truck. If it was a pickup truck, it also needed to have a 6-foot bed. But if you do that, you can then fully depreciate that vehicle, the cost of the vehicle, in the first year. So, and you don't have to pay off the vehicle to do that either. You can finance the vehicle. So say it's a $60,000 vehicle, as was the case with my client. They put down, let's say, $5,000, and then they were able to get a $60,000 write-off on their tax return. They got the new vehicle that they wanted, and that $60,000 write-off completely eliminated their profit in their business. Now, they were already an S corporation, so they had a lower liability. They didn't have the self-employment tax to worry about. But even as an S corporation, this saved them over $20,000. And if they were an S corporation, that could save in the ballpark of $30,000 just by doing that one change. So they went from potentially having to pay the IRS about $15,000 to getting like a $4,000 refund. So that is the impact that tax planning can have on your business and on your tax situation. If you are in need of help with any of these things, once again, please reach out to us. Please give us a call. Our number is 708-914-8220. In the corner down here is Katz Milanec is the name of our firm. Also on my shirt, you can see Katz Milanec. KATZMILANEC.com is our website. And again, our number is 708-914-8220. I guess I'll, for the next couple minutes, I'll talk about a credit that you can get as a business. So one that can save you quite a bit of money. So there's a credit called the Research and Development Credit. This credit, you have to be making some sort of change to your business. But in making a change to your business, whatever the expenses were for that change, you compile all those expenses and you put it all together, and 20% of the allowable expenses can be taken as a dollar-for-dollar tax credit. So, for example, if you have $100,000 of research and development expenses, this can create a $20,000 tax credit for you. And what that does is, if you have a $20,000 tax liability, that will completely eliminate that $20,000 tax liability. let's say you only have a $10,000 tax liability. It will turn your $10,000 tax liability into zero, and then you'll have a carry forward of $10,000 to go into the following year. So if that is something that would interest you as a business, that is also something that we do. If you're interested in that, please give us a call, 708-914-8220. Again, that's 708-914-8220. My name is David Milanec. It's been a pleasure being with you guys here today. If you need help with anything regarding taxes, please give us a call. Once again, 708-914-8220.